SAB 99 Tracker is the easy way to aggregate uncorrected errors for SAB 108 and SAB 99 analysis. In this video, we'll walk through what SAB 99 Tracker is, what problems it solves, and we'll walk through an example. As accountants, we all know that behind every set of financial statements is a list of uncorrected errors accumulated in a spreadsheet somewhere. A spreadsheet works just fine when there are only a few entries to track. As anyone who has ever managed summary of uncorrected errors will tell you, the longer the list of entries, the more mistakes are likely to occur in aggregating the entries. Let's take a moment to look at the common issues with accumulating uncorrected errors in spreadsheets. First and foremost, one of the most confusing aspects about performing a SAB 108 analysis is figuring out whether the direction of the rollover impact of an error is correct. A spreadsheet obviously has no built-in logic to help you out with that. Second, because errors must be aggregated for each period presented in the 10K, it means that each time a new error is discovered, there are 3 separate aggregation spreadsheets to update. But the tediousness of that is not the issue. Rather, we have seen time and time again situations when the impact of the same error was wrongly analyzed across different years with inconsistent entry directions. Each year being in its own spreadsheet makes it difficult to detect such inconsistencies. Last but not least, spreadsheets are prone to math errors. For example, it is commonplace for formulas to break when new rows are inserted to add new entries. Another common error is that some entries are unintentionally excluded from being tax-affected, or that tax-only adjustments are erroneously tax-affected. Of course, a detailed review of the spreadsheet with a fine-tooth comb will detect these errors, but it takes time. In our experience, it can take anywhere from 2 to 6 hours combined between spreadsheet preparer and reviewer during a typical quarter-end or year-end to finalize the SAB 99 analysis. That's 2 to 6 hours during the busiest times of the quarter. SAB 99 Tracker was specifically built to solve issues when using a spreadsheet. As a result, you can rest assured that your rollover entries will always go in the right direction, accurately update aggregations for multiple years in one fell swoop, and perhaps most of all, reclaim some of the 2 to 6 hours of your team's time during the busy quarter-end and year-end reporting months. Before we dive into the demo, I want to address some frequently asked questions. Does SAB 99 Tracker send information to a remote server? The answer is no. SAB 99 Tracker runs locally on your desktop or laptop. It does not access, collect, or transmit personal information. It also does not transmit data populated into the application. Next, can multiple team members make updates to the same SAB 99 Tracker entries file? The answer is yes. The entire set of entries in SAB 99 Tracker can be exported and saved in our proprietary file format via the bulk export feature. The file can be shared with other members of your team who can then import it into their own SAB 99 Tracker installed on their computers via bulk import feature. From there, they can make updates to the file of entries, export, and share the updated file. Let's go ahead and take a look at how SAB 99 Tracker can make life easy for you. Here, I'm on the View P&L Sum page where you can generate a summary of uncorrected misstatements for each year presented in your 10K. The top part here is the aggregation for impacts to continuing operations. It is broken out by pre-tax impacts, tax effect thereon, and subtotaled to give impact net of tax. To apply the tax effect, simply enter the tax rate in this box and click on Apply. Entries that affect income tax expense only are aggregated separately, with everything footing down to the net impact on continuing operations. Impacts to discontinued operations are aggregated separately. These are also broken out between pre-tax impact, tax effect thereon, and income tax only impact. You can see the underlying entries detail by clicking on View Detail. Finally, you can generate a ready-to-use Excel export. With a little formatting, it looks like this. It comes with a Summary tab and 4 other tabs containing underlying entries detail. It's a spreadsheet all right, but it's guaranteed to be accurate and internally consistent. You can share this spreadsheet with your auditors. Back to Sub 99 Tracker. Let's go to the View BS Sum page. Here, you can see the balance sheet Iron Curtain impacts summarized by quarter. You can see the underlying detail by clicking on View Detail. Finally, you can export the summary and underlying entry detail to Excel. The last thing I'll demonstrate is adding a new uncorrected error entry to Sub 99 Tracker. This really is the engine that drives everything, so pay close attention. We're on the Add, Edit, View Entry landing page. We create a new entry by clicking on this button. For illustration purposes, let's say you've discovered that deferred revenue has been consistently understated since 2017, and the error was detected and corrected in the current quarter, Q3 2020. Let's go ahead and capture the information about entry in the Entry Information box at the top of the screen. The entry number right here is system-generated and cannot be edited. Let's go ahead and type in the entry description in this box. The category field is used to group entries whichever way you want. For example, a category could be an income statement caption, segment name, or entity name. In this case, we'll go ahead and select Revenue from the drop-down list. Corrected as little, R is for tagging entries that have already been booked as immaterial corrections to previously issued numbers. For no new entries, this will be a no. Entry type is where you tag whether the entry impacts profit before tax, income tax expense, or discontinued operations. In this case, it impacts profit before tax. Now, let's go ahead and enter the financial amounts. The 10K to be filed for financial year 2020 will include income statements for 3 years, namely 2018, 2019, and 2020. So 2018 is the earliest period we need to capture. In order to make sure that we get the 2018 rollover impact right, we need to enter the Iron Curtain impact or balance sheet correction at Q4 2017. Let's go ahead and click on the Add Financial Year button. A dialog box will pop up prompting you to choose a year. In this case, we'll start by selecting 2017 so that we can capture the Q4 2017 Iron Curtain impact. This grid shows up, which allows you to capture the Iron Curtain entry by quarter. Let's go ahead and enter the Q4 2017 entry to debit P&L revenue $5,000 and credit current liabilities deferred revenue $5,000. Note that debits are entered as positive amounts and credits are entered as negative amounts. We're done with 2017. So let's go ahead and add year 2018. First thing you'll notice is that the prior year Q4 amounts are automatically brought over from Q4 2017. Let's go ahead and enter the Iron Curtain entry at each balance sheet date. Sub 99 Tracker automatically calculates rollover impacts. We are done with 2018. Let's go ahead and enter 2019. Finally, let's add 2020 amounts. The issue was caught and corrected during Q3 2020, so the iron curtain entry at Q3 is 0. Now let's go ahead and click Submit. Let's see whether we can find the deferred revenue entry we've just entered. To do that, let's click on View Entries, then select Financial Year 2020, period Q3, then click on the View button. All entries impacting 2020 Q3 year-to-date period will appear in this list. Let's find our deferred revenue entry. Next, let's look up the same entry's impact to 2019 financial year. Finally, let's look up the entry's impact for 2018. To learn more about Sub 99 Tracker or try it free, go to www.sub99tracker.com. Thanks for watching.